learned from the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, ladies and gentlemen, I got your watch list coming in on August 27, 2021, and tomorrow is going to be the most important day for the stock market. And I got 3 stacks that I'm looking at coming into the end of the week, but today was absolutely wild, sad, disheartening. There was many things that happened, but if you saw what went on, you had the blast in Kabul. It was a very chaotic situation, but if you notice, the market actually ended up moving not as big as it pretty much moved last week. So this is highlighting the day before tomorrow. The market is still waiting for what Powell and the Fed is going to say tomorrow. So it is very important. Powell is going to be speaking about 30 minutes after market tomorrow. Depending on what he says, that will be key. And another factor that a lot of people are missing today, there was a lot of focus on what happened in Afghanistan, but you also did get to hear from 3 Fed members the day before Jackson Hole, and all of them were talking about tapering. So we got a lot to talk about. I'm going to go over what happened today, what we're looking at for tomorrow, how we're going to wrap up the week and the weekend, and then what could really happen with the market along with the plays. And I also want to show the difference between taking risk off before an event and then actually holding through. This is what a lot of people are talking about. So let us not delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes for open. It's the first link in the description and it's pinned in the comments. We better see you there in the morning. It's free $99. It costs you nothing to join. YouTube.com/the-stock-market. You can post the plays, see the plays, watch us come to life. And yes, if you still call the stock market the stock exchange, then yeah, we are the place to be. And the most important thing you need to do, post your watch below. Let us know what you're looking at. Got any plays, comments, remixes, anything. Post them below and source that info. Shout out to Chad, baby. So, right off the bat, the Afghan crisis really stole the show today, and it surprised us in a very surprising fashion. Nobody saw that coming. There was no way you could have. But like I said, a big part of what we saw today could also be attributed to the hawkishness from the Fed members earlier today. Now, as far as the Afghan situation, what made it very important, or actually just a lot more impactful, was that you actually had U.S. casualties. Over 12 Marines have died, and even 1 medical person. And we did get to hear from Biden after hours, but it is looking like this situation is still ongoing and more could even end up happening. So we will talk about that. But now, depending on how tomorrow plays out, that might free up the market to move a little bit, but it all really depends on what Powell says. And then we may get to see how the market really feels about the situation, but do not overlook how important Jackson Hole is. Again, we've waited so long for it. It has been the main narrative, and believe it or not, you even have some analysts already looking ahead, even if it is a dud or not, given the comments you got from those Fed members today. That whole talk about September tapering, it really came up out of nowhere. And if you remember last week, 2 weeks ago, a lot of people were worried about the Delta variant and what was going on with that, the supply chains and everything related. So what we got today really put the tapering back on the agenda today, or at the fact that you got those Fed members talking. They really made a point to talk about that the day before, which is the biggest deal of all of it. Now, coming to your first pretty picture here, this is what I said here in the beginning. It's showing that fear is actually the greatest enemy. So what you see here in white is the loss aversion average that you would get on the S&P versus just playing the S&P. So loss aversion means selling out before any event. So if you sold out before any key economic events, from Fed minutes to the FOMC, all the way down to this Jackson Hole, you would actually reduce a lot of your returns by a pretty decent margin, at least 20 or 30%. So it's highlighting how oftentimes you will see the market react a little bit more aggressive or make a big deal of something, but the market is able to digest it quickly. And that's even the next key that I have here. There will always be a reaction to the Fed, but don't underestimate the market's ability to get used to it. We started raising rates And the market is more worried about us raising rates now than the tapering. The tapering's related to bonds. But when we raised rates in 2015, 2016, it was very similar to what you're seeing now, where people are like, no, we can't do it. The market's going to freak out. We don't like it. And sure enough, they started doing it. The market didn't like it at first, but they were able to quickly adjust. And before you know it, it was Fed meeting after Fed meeting. They were raising the rates until we started to cut them, or they just stopped and kept it at a certain level. So what I'm trying to say is that we might get some immediate volatility off of this, depending on how it plays out, whether it is a disappointment or not. A lot of the opinions and expectations have really been fluctuating. So it's really just a 50-50 what is going to happen and how the market's going to take it. But I really wouldn't attribute any long-term effect to it just yet, because the market is quick at finding a narrative to start looking ahead and just keep the wheels turning. So once we get Jackson Hole out of this situation, this is the final point now. Gold, and this was brought up today, but this is probably going to be your best indicator right now for any geopolitical risk. You could look at oil, you could look at bonds, and the bonds are very, very key, but given the fact that it's going to be tied up direct to the Fed policy, the tapering and all of that, it can be skewed a little bit, whereas gold, this is its moment to shine, no pun intended, because it is just a safe haven in that sense. When people get worried, they want to put their money somewhere. You know, this situation with Afghanistan as well as now Jackson Hole, it could move all sorts of assets, but now gold kind of has its own little unique purpose right here. So coming into tomorrow, we have to watch what the Fed says, but now after hours with everything we've heard with this situation, I am pretty sure that the market is expecting more Kabul headlines. We do need to watch what happens overseas. So far, Asian futures, Australia, they're not reacting too negatively just yet. China did snap their winning streak today, but the market is pretty much going to be ready for it. And what I'm thinking where the black swan lies, and I will be watching gold, it's going to be in the event that you see more aggression and more of this stuff escalate beyond Afghanistan. If that starts to happen, or if you start to see things pick up at a fast pace, that kind of seems to be the narrative or the only thing surprising people. You know, most of this stuff, you could have seen it, but how fast it occurred, that is definitely part of it. If we see things spread and then spread fast, that might start to affect investor sentiment. Somebody asked, will this bring the market down? It's a yes and no question, but really you got to tie this back to even corporate earnings. It could get people fearful. It could scare them in a certain way, but at the end of the day, what goes on in Afghanistan is probably not going to drop corporate profits by 10-15%, so keep that in mind. Now, coming into the company news and events today, pretty straightforward. After hours, we got to hear from Biden. He has vowed to hunt down those responsible for the Kabul attacks, and a lot of people are confused on this because he has condemned ISIS, not the Taliban. The Taliban and ISIS are completely separate entities. They are actually two different things. They don't like each other. You may have heard of the prisons getting freed in Afghanistan, and some of the ISIS people were in there, but it does not mean that they are friends or working together. But even Biden himself said, we don't really trust them all the way, but their self-interest is actually against ISIS, just as the United States would be. So with that being said, now you could blame a lot of people, a lot of things, but this is not changing the strategy, and he still believes the strategy is good as far as the perimeter and how it's set up. He thinks they don't need to do anything, and they're pretty much going to continue as planned, and they are not condemning the Taliban, and that's what makes this so interesting, because you don't know really who to blame with that situation, and that's why everything is still ongoing. But he did take a little bit more of a hardline approach. However, nothing else has changed as far as how they are doing this thing. They are still looking to keep the deadline, and they are still trying to get people out as soon as possible. But now coming into the stock news, Peloton tumbled after hours. They had a downbeat forecast, and then this one is really interesting. They had an accounting problem in how they have been accounting their inventory, and they said it is actually a material weakness. So the stock was down like 14-15% at one point. It was able to bounce back up to down 7%. They said they should be able to get a handle on it. They said they're also rolling out a monthly payment plan, and that could help a lot. But this one is definitely going to be one to watch coming into Friday. It's kind of the first time we've heard about an accounting error, especially admitted by the company, in a while. So that one was really, really key. Then Johnson & Johnson, they defeated their effort to block the Texas corporate restructuring move. A judge allowed them to do the quote-unquote quote Texas two-step, which would have allowed them to pretty much separate one of their companies, the company in risk with the asbestos stuff. It would have allowed them to separate the company. We heard about this a couple months ago, and then pretty much give all of the bad assets to a new LLC and then file bankrupt so it could limit their liability for the whole company. Very controversial, kind of shady is what a lot of people would say. It's a very higher level dirty business move, but the judge did not block it and they are able to do so. So I'll be watching that stock and we'll see how that plays out or ties in anything else. Then this one was earlier this week. We heard it, or last week, but Southwest Airlines, they finally responded and they are trimming their schedule after the workers' outcry of all the work. So watch travel and airlines tomorrow. And then finally, the SEC Advisory Committee is readying a plan to beef up SPAC disclosures. Been a lot of baby mama drama with that, and we've actually heard a lot from the SEC so far, so we will see how that one plays out. But a very straightforward day today. It was shocking, to say the least. I'm almost speechless about it, but it is all about Powell. It is all about Jackson Hole, and by the morning, we're pretty much going to get an idea, and then you're going to see how people position for the weekend and if they feel confident in it or not. So I hope you're ready, but that is pretty much it. So let us get into the plays. So right off the bat, I got 3 different stocks that I'm looking at coming into tomorrow. I have an old play on one of them, one we made today, and then I'm going to be looking at Peloton for that news. But the first one, SQQQ, this was the play that I made, and I like it because it offers a cheap downside protection if things escalate at Jackson Hole. The SQQQ is related to the NASDAQ and tech stocks, and just remember at the beginning of the year and in general, those are going to be the companies more prone to volatile moves in the bond market. So I like that. But then, as you saw today play out, there was a lot of other stuff on the table with Afghanistan. I decided to go with some of these downside plays because, one, you could have protected yourself from what was going on. It wasn't the main thing, but my logic was any play that was made is pretty much going to double as a Jackson Hole play. So I was able to justify that without thinking I was going too crazy there on the puts. But as far as the play that I made, I grabbed 20 of the next week SQQQ, 8.5 calls, slightly out of the money. It doesn't move too much, but I got them at 8 cents. They were able to move up a little bit more, and the fact that they stayed elevated throughout the day because I bought them early on, these should have got clapped. So the premium in these protection plays is actually holding up, which is interesting. So I am definitely going to be watching out for that one, but I really, really like that in general. We will see how it plays, and I talked about getting some calls today. I ended up not getting them, but I will pretty much have 30 minutes tomorrow to see, just to get both ways. It seems like straddling Jackson Hole has been a very, very popular strategy amongst a lot of investors and funds now. So that is the first play. The second one is going to be Peloton. That report seemed very, very bad. You know, a company admitting to a material weakness or an accounting problem. I think it's going to be good. The fact that they were able to bounce almost 7% post-market. I'm really liking that for a tomorrow Friday play. Again, depending on how the volatility is, but you could see it. This is going to create a big range. So depending on the premium, if we want to play it and all that, this one could be very, very interesting to watch. And they're at a very key 1-year level. Remember, Peloton is a fairly new company. So depending on how it moves from here, it could either chill and show stability, or it's going to pretty much set a range to the higher or lower end. And then from there, we will see what happens. But that is going to be the second play. And then finally, XOM, it's pretty much linked to the dollar. So you could tie this in to what's going on overseas. Again, even oil in general, but now all of the other stuff with China and all of that. And now any tapering, bonds, anything of that nature. But there's been a very, very strong correlation between the dollar and the price of oil, and they have both been moving pretty rapidly in this last week. So as we come into Jackson Hole and everything else going on, if one of them is able to move big with velocity, I think the plays could come back here. And then even as a secondary, a similar logic applies to the bank. So I am definitely going to be watching those as well. But those are going to be the main plays. As far as everything else, going to be watching them. Going to be watching IWM. This is another form of protection. I did make another play on this one, but you could see here they really haven't moved. And the thing about IWM, it is consolidated with a lot of tech, so it's a little different than the Dow Jones or the S&P. That's why it's had this run up and it's not moving the same way. But the premiums are a lot cheaper to insure, and in general with everything else, they have been underpacing, and this is the largest underpacing between the Russell and then the bigger indexes since 2011. So pretty pretty much as we've been hitting record highs on every single index, the Russell pretty much hasn't budged and is kind of staying in this level. So a lot of people are noticing that, but I decided to get an October play. Again, I justified this there with the Jackson Hole and what was going on, and it has a decent amount of time, 2 months. I grabbed the 198 puts. I grabbed 3 of them for 210, so a little bit bigger of a position, not too crazy. And then I also closed out that HD credit spread, took a 350 loss. I didn't want to risk it for the dividend assignment risk tomorrow, so that play was a dud, but I will definitely be watching HD to see if I could get another one. But watch them, SQQMO. I want to see how it played out. I mean, it ended up trading pretty decent today. They had news that they are raising their dividend, but didn't really affect it too much. We will watch how value plays out in the midst of anything. BABA, they're starting to drop a little bit after hours, and this one will be key. Again, it has been snapping that streak, and you have definitely seen this pattern before where it's doing it. It's stair-stepping down, so depending on what news we get from China and how things play out, that will be key. But take notice, you also have a lot less volume, both a lot less volume on the way up and then even kind of coming back down. So stay vigilant and stay cautious, but there could always be opportunity there. CRM, great earnings, great volume, a lot of big expectations. It sucks. The premiums on both sides dropped, believe it or not. So they beat and they did very, very good, but puts and calls were both down. A little bit unplayable today, but maybe that changes tomorrow. I think that's going to be good. There's going to be a lot of eyes on them. Gap, they raised guidance. They did good here on earnings, so they've kind of been struggling, and some of the retailers, if they have done good, they have been rewarded, so I will definitely keep my eye on that for tomorrow. And then Peloton, like we said, coming into the other chart here, TCAT, the NFT boom is going crazy. I bought my first NFTs. I know. I guess everybody is too, but this one's interesting because the volume's crazy, and you remember this thing last time during the first wave, it really went crazy, but you're not getting that same response here. So maybe because there could be a lot of toxic debt or toxic shareholders holding it and all of that, it seems like buying an NFT probably would be better than the stock, but this thing could wake up. It will be key, but you have a lot of market participants. And another one, you see it painting the high ticker after hours support. We've seen this thing just move very, very crazy, but I did notice a lot of traders, everything was at a standstill today. People were waiting, but it seems like traders kind of found their fix in this company. It's doing its thing. I don't know much about it, but it seems to be getting some momentum, so watch them. Then INO, I noticed they were up a lot today. They've slipped towards the end, but they were still able to close 5%, so this one is related to the vaccine. I thought that was key, so watch them coming into tomorrow. Then JP Morgan, this could be an interesting bank play. Remember their earnings and how they've played out, but XLF and a lot of the banks, they're kind of a little bit high, so JP Morgan's lagging. Depending on what sort of data and info we get from Jackson Hole tomorrow, they could be a good play or a good alternative to XLF. And then finally, Myrna, they were able to close up about 1%, but given the play from yesterday, I still like the logic, and I want to see how that one continues. And then finally, TLT, baby, the market is kind of matching up with everything that we've been talking about. You even got a decent sized move here on the dollar, but everything is waiting. The real key tomorrow, it's not going to be as much as what is said, but the sort of volatility that it triggers. And I wouldn't underestimate coming into Friday the ability for the dollar or bonds to kind of lead, even if the market does its thing. Remember, they have been detached, but depending on if the market moves and likes it tomorrow, I wouldn't be surprised to watch all of them move in the same direction. Essentially, if the market comes down, I wouldn't be surprised to see the dollar drop and TLT drop, and then vice versa. May sound counterintuitive, but if the market goes up, I wouldn't be surprised to watch the dollar go up and TLT at the same time. It could create a decent move tomorrow, but the real key is going to be how do they open before everything. So they will need to kind of match up where the dollar and bonds, they may gap up a little bit ahead of the market or vice versa. You might see a bigger gap up or down on the SPY, while the dollar and TLT will use that first 30 minutes till Powell. They're going to kind of have to match up and meet up. So we've waited a long time for tomorrow. It's going to be exciting. There's a lot on the table. I don't think it's going to be disappointing, so I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And don't forget to shout out your vets, man. They've sacrificed a lot. Thank you for all of your service. We love you, veterans. And Nicole loves you. I love you. I'm going to see you in the morning. Let's go.